Good morning and welcome to Bazaar Morning Call. I'm Anuj. With me is Sonia. We are back after a midweek break, of course. As you heard in the montage, but everyone's saying rupee's fall is perhaps a good thing. We'll find out whether the market thinks alike. Sonia, good morning.
Hi, good morning. The rupee fall may be a good thing, but there's so many other elements that are falling along with it, right? I mean, the Dow is under pressure. Global currencies are not looking good. And you have the weakening macro data as well. You think... on one hand, the fall in, there's a big fall in crude as well. That's a positive. You think that could offset the negatives that we've seen?
Yeah, Sonia, today is going to be interesting. I think today is the kind of day where you don't go into trade with any pre-decided mindset. Hang Seng, I think, was down 300 points thereabout. I think it's recovered very sharply. But yesterday it was down, I think, 400, 500 points while we were not trading. And now, it's seen sharp recovery. Excuse me. So we'll have to react to 2 days of bunched up cues. But the market has factored rupee at 70. Is it headed to 71? That's, of course, key question number one. Today, we're asking 5 or 6 key questions. First is rupee headed to 71? And is the market prepared for that? As we saw on Tuesday, that market was prepared for crude for rupee at 70. That much market has absorbed. Is it prepared for more? We'll find out. Today is also the weekly options expiry on the bank Nifty. That at times has its own factors. So that will be important cue. The Nifty is now in a well-defined band, 11,300 to 500. Can it move out of that? Again, we'll find out. IT is going to do well once again, and IT index on Tuesday hit a fresh all-time high. That's going to be a bit of a tailwind for the market. Also Reliance, because it's an exporting company, so that's why there are two large pockets which are doing well for the market. Can they cushion the fall once again? And of course, will decline in crude override everything else? For us, that's been the most important cue. So I think we are in for a fascinating day of trade today.
Oh, absolutely. I know macro data is generally lag data, but it's not looking good, right? I mean, as Lata was also telling us, trade deficit widening to a 5-year high. The crude import bill has gone up so much, and there are now talks of the current account deficit perhaps ending at 3% by the end of the year. I mean, all of that, of course, will put pressure. We've seen 3 days of selling by FIIs as well. I think almost 1,900 crores of selling is what we've seen. So how do you negotiate all of that, Anuj? And also on the banks, the bank Nifty, if you look at it over the last 6 months, is up about 20%.
Yes.
Today is the expiry. You think that leadership from banks is something that will continue?
No, I think the leadership remains, Sonia, with the bank Nifty. That point is intact, but at the same time, the IT index is also at new highs. So today's weekly options expiry, 27,854 is the level I'm watching out for. Why is that important? That was Tuesday's low. And from that point, we had a decent rally on the Nifty bank. So if it trades below 27,850, perhaps you will see long unwinding. Short covering is possible if the market does not see any follow-through after a gap down. First of all, I don't know if there's going to be a big gap down because our market has become resilient. Like on Tuesday, the market's willing to absorb a lot of macro weakness. So I don't know if, the SGX Nifty, if you're going by the level, is indicating a 70-75 point gap down. I'm not too sure that, we'll get that kind of gap down. I think we perhaps will get a 10-15 point gap down. That's likely. After that, we'll see, of course. Kotak is going to be the deciding factor today, and that's the reason for that is Kotak has already corrected from its highs. Now, the RBI has struck down the plan, that, very smart plan that Uday Kotak had come out with. Now that's, RBI saying nothing doing. One thing is for sure that Uday Kotak will find out some other way and, and of course some time. But there's going to be a bit of a niggling worry. For long-term investors, perhaps that's going to be the best opportunity. But for today, how will Kotak react? I think that will have an important role because that's the second biggest component of the bank Nifty in terms of weight. So that's why I would want to see how this particular stuff reacts today.
Okay, well, we'll keep an eye out on that. By the way, dramatic turn of events across the Asian markets. I mean, the Hong Kong market is now almost in the green. It's recovered more than 400 points from the day's low. So let's see how that one shapes up. But for now, let's kickstart the trading day. Of course, the rupee will be the key talking point today. Lata's not here with us in the studio, but she is with us on the phone line. So she joins in. Lata, hi, good morning. Not looking good, I mean, for the rupee. You were talking about how there is a possibility of the current account deficit widening to almost 3%. But what about just the trading day? What is the prognosis?
Well, I'm feeling much better than I felt about 2 hours back. Yesterday night, when we went to bed, the offshore was indicating a rupee opening of 70.70. And it won't open at 70.70. I thought 70.5. but the dramatic recovery that we have seen both in Asian equities and in Asian currencies. So yesterday, CNY was at 6.9395 at several points. That also worried me, and the dollar had gone to 96.98 on the TXY. Now the dollar index is at 96.56. The CNY has come up to 6.9192. So, both in currencies and in equities, there is a decent amount of recovery. So 70.5 may not happen. It will be 70.1, the previous low at which we closed. But we must not be in any doubt that we could be an underperforming currency today. The other currencies are reacting to global cues. We also have an important domestic cue to which we haven't reacted, which is the trade deficit you spoke about. It's not a mean number. We shouldn't talk about 3% lightly. 3% current account deficit is as bad as 10% inflation. How much you would be anxious if inflation had come in closer to 10. We should be as anxious about a current account deficit at 3. In the last 30 years, the only time we went well above 3% was in 2012-13. And we got punished, You saw the 2013 impact. Being called fragile is not a joke. So as we get to 3, we must genuinely worry. So there will be a little bit of an overreaction. India would be a slight underperformer. But because there has been such a good recovery in Asian markets, that fall could get smothered. Ultimately, everything is in Reserve Bank's hands, but there is a weakening bias. 70.1, 70.2 should be the opening.
Okay, Lata, thanks a lot for that. We'll, of course, come back to you for more on how to approach individual stocks, etc. By the way, ICRA has forecasted that the current account deficit will go to 2.7% by the end of this year versus 1.9% last year. So let's see, lots of things to talk about, a lot of macros to focus on. Let's take a look at what our wise experts have to say as we head into trade this Thursday morning. Victor Schwetz of Macquarie says the world remains on the dollar standard. There are no alternatives. He says the dollar remains the key driver of most macro variables, but it is unforecastable. He says they are concerned that declining liquidity, attempts to raise rate and China's hesitancy is a recipe for a stronger dollar. He adds that Turkey might tip it over.
Okay, let's get you some money market views as well. It's going to be important. Samiran Chakrabarti of Citi says on the back of upward momentum in the trade deficit and the stickiness of demand-side pressure, Citi has revised their trade deficit forecast by $10 billion to $204 billion and now expect the current account deficit at $88 billion or 3.2% of GDP. Samiran adds that persistent disappointment on the current account deficit and weak emerging market sentiment opens up the possibility of the dollar-rupee heading towards the 72 mark as the 67 to 69 range shifts to a 69 to 72 range. Of course, that's not a decall.
Okay, so further weakening of the rupee. On the bonds, Mohan Shenoy of Kotak Mahindra Bank says bonds track the rupee and crude oil prices, and while crude prices have moderated overnight, rupee depreciation is likely to impact sentiment. He expects the 10-year benchmark bond yield to trade in a range of 7.81 to 7.86% for the trading day.
Okay, over to Mangalam now for the world view.
Well, as India completed its 71 years of independence, entered 72, there are a couple of things which are around 71, 72 as well. Brent, that one is below 72. The other thing is rupee, that is at 70 to the dollar. Let's see where Brent and rupee converge, if at all they do. So this is something the street will be watching out for, the trade-off between that. As far as Wall Street is concerned, yesterday we saw weakness across the board, across the indices. Individual stocks which were lower. Macy's, the likes of that, was down by about 16% as the company reported lower sales year-on-year. However, the decline in Wall Street was arrested. They recovered from the 50-day moving average, primarily on account of reports that the White House is preparing to expand rules that favor U.S. productions or U.S. products in the government products or government projects. So that is something that arrested that decline. Across the Atlantic, though, Turkish tension is still underway. We have cuts of over 1.5% for all the three frontline indices. Similar is the case for the peripheral indices as well. And then there was news that Turkish President Erdogan will impose higher tax on U.S. imports, the likes of alcohol, cars, as well as rice. Emerging markets saw some pull-off, a cut of almost 2% on both the Brazilian as well as the Russian index. However, the Asian markets, which opened in deep red, have seen some bit of recovery. The Hang Seng as well as the Nikkei back in the green, and the SGX Nifty too recovered almost 95 to 100 points from the low point of the day. Still indicates a start around that 11,400 for our markets.
Okay, thanks a lot. So, a tepid start likely. The big story this morning, of course, is the way the rupee has weakened and the deteriorating macros as well that we're dealing with. Ray Faris of Credit Suisse and Jahangir Aziz of JP Morgan join us on the phone line with their assessment. Gentlemen, morning to both of you. Jahangir, I want to start with you on the trade deficit number, that's this $18 billion number that has come through. Would you revise your trade and current account deficit targets? I mean, people are talking about 2.9, 3%, 3% plus as well by the end of this year for the current account deficit. Would you concur?
Well, we already had a current account deficit number close to 3% even before these trade deficit numbers came about. And I think the way we were thinking about it had very little to do with trade flows. It had to do with the fact that the savings investment balance in India has been falling and falling very sharply. And with fiscal deficit rising and with both of the central and the state together, and with corporate savings falling, any pickup in investment, you would see a very sharp increase. You would see an increase in the current account deficit. So we already had a 3% current account deficit for the year. Again, it had very little to do with the oil prices, etc. I mean, all of those things do play a role, but largely it was based on the idea that in India, the saving investment balance is turning negative, with some pickup in investment and a significant saving coming from the private sector.
Okay, Ray Faris is also with us. Ray, good morning. Your thoughts on the Indian currency? It was resilient for a long time, but last 3 or 4 days have been rather weak.
Well, markets in general have been weak at a global level, and that's translated into Indian markets being weak and there being foreign outflows, both from equities and from bonds. And with the trade balance and the current account balance in deficit, if portfolio investment flows turn negative, well, the currency has to weaken. Certainly, Turkey has been something of a proximate driver of all that, and Turkey hasn't really completely settled down yet. But I think, a lot of this just has to do with still a challenged equity market environment globally, and the countries that have current account deficits are struggling to get financing.
Oh, that's true. Jahangir, comment on that. You think the RBI will defend the rupee at this 70 level? And even if there is an intervention, will it do anything to stabilize the rupee at all, considering the fall is mostly due to global factors?
Look, I mean, the RBI has been intervening quite heavily in the market, and it has lost quite a bit of the reserves that it had accumulated in the second half of the year. Now, intervention policies do work in a very short period of time in trying to slow down the pace of depreciation. But if the depreciation is being driven by factors that is outside the control of the RBI, you can intervene, but you're not going to get very much out of it. I think at the end of the day, they will have to resort to what traditionally countries have used. You've seen Indonesia yesterday raise rates by 25 basis points. That was not in consensus, and you will see interest rate defense being used if the rupee weakness continues, and that's regardless of whether or not inflation is going to decline, which it will arithmetically in the next couple of months. I think they will have to bring interest rate as a instrument in defending financial stability and the rupee sooner rather than later.
Okay, Ray, since you spoke about the global trend, your thoughts on dollar index itself? We are now very close to 97. You reckon there's more dollar strength from here?
Just right now, I mean, that certainly seems to be the risk in that to get the dollar weaker really requires some new leadership in the G10. We have thought so far, and our house view has been that that would come from an acceleration in European growth. European growth is improving. It just hasn't accelerated enough yet to get markets to really reprice the ECB and think that the euro should be a stronger currency. And it may take a little while, another couple of months or so, for that European recovery to really begin to come through to a sufficient extent to support the euro. In the meantime, these currencies like the INR are going to remain soft. And just to, kind of reiterate what was just said about intervention policy, it's the RBI focuses on trying to manage the volatility rather than the level. So I wouldn't expect RBI to try to hold any particular level. That's just not what they do or their style. But they will intervene persistently to try to keep volatility under control and manage the pace at which the currency moves.
Okay, so they will try to keep the volatility under control. Jahangir, before we let you go, do you see a further meltdown in global currencies? I mean, the rupee, of course, has been a result of that. Do you think this rout will continue?
Look, I mean, the rupee per se, I mean, it has remained very much in the middle of the emerging market band. So I don't really think that the rupee depreciation that has taken place over the last few days is outside of the range of other emerging market countries. The Turkey event has led to a reassessment of risks surrounding every current account deficit economy, every country that has rollover foreign exchange debt rollover risks, and India is part of that. Now, whether or not things continue to worsen from here and onwards is very hard to say. The movement in the Turkish lira was a combination of a variety of factors. It was Turkey's own continued worsening imbalances. There was concerns about policy direction, policy certainty, and of course, the U.S. tariffs and sanctions that were imposed in August. My sense is that they will be taking measures once the Turkish lira does stabilize, which it has in a couple of days' time, even though that may not actually be a permanent solution to Turkey's problem. You will see some sort of stabilization in emerging market countries. What I'm more concerned about is where the dollar-euro goes from here, because that ultimately is where the weakness or the strength for emerging markets come. And as the other speaker was talking about, until unless we see significant upturn in euro area growth so that it narrows the growth differential between U.S. and euro area, it is very hard to see dollar-euro weakening from here. And if that doesn't happen, the emerging market countries will remain under that pressure till that is reversed.
All right, Jahangir and Ray Paris, thanks a lot for your time this morning. It's going to be interesting, of course, this morning because, as Lata was also pointing out, there's sharp recovery that you are seeing right now in Asian markets, both equities and currencies. The bulls would say, thank God we didn't trade yesterday, because yesterday was quite bad. In offshore market, we almost hit 71 yesterday itself. For now, there's a bit of a recovery. Hang Seng almost went into the green, has once again come back into the red, so all over the place. We'll take a break. Up next, micros, CNBC-TV18's top 10 list of stocks to watch out for.
Hi guys, welcome back. You're watching Bazaar Morning Call. This morning, the Asian markets have recovered a lot actually from the lows. The SGX Nifty has now moved to the high point. There are some positive developments in the US-China trade talks. So China has now said that it has accepted an invitation from the US to take part in trade negotiations in late August. So some amount of these markets across mainland China are now recovering to trade a tad bit in the green. Hong Kong, for example, has recovered more than 400 points from the day's lows. But our research team is here to give you the list of top 10 stocks to watch as we head into trade today. So let's welcome all of them. Hi guys, morning. Anuj, what are you looking at today?
So, Sonia, before that, just one more explanation on SGX Nifty, because level is important. Don't go by how much it's down. Yesterday, it was trading. We were not. 11,406, and it represents Nifty futures. Nifty futures on Tuesday closed at 11,463. So technically, SGX Nifty is indicating a gap down of 57 points. So that's just 1 point on board. In terms of stocks, I think first half should belong to IT. Second half could be different. HCL Tech is at the cusp of negating a major double top, and why I'm watching out for this stock is that 1 quarter back, because of the disappointment in numbers, it had a correction, and now the Nifty IT is at new high. HCL Tech is still 10% off its high, so that's my first stock to watch. Shrey Infra, I think, is the weakest stock in the F&O market. Fresh 52-week low, and stock has exactly halved in 2018. It started at 100, it's at 50 now, and continues to see delivery selling at all levels. So that's the other stock to watch today.
Okay, but the stock of the day could be Kotak Mahindra Bank as well after all the developments in the last 24 hours. Abhishek is here to tell us more. Abhishek.
Well, Sonia, RBI has rejected the preference issue to bring down the promoters' holding in Kotak Mahindra Bank to about less than 20% as they had mentioned. So, Kotak still says that they will engage with RBI as they believe that this preference issue can meet the requirement of RBI's promoter stakeholding. The impact of RBI's denial is that the promoter will now bring down its cut down its stake to 20% as against 30% right now. The alternative route for Kotak Mahindra Bank is through an M&A deal, that is merger and acquisition, through fresh issuance of equity or a stake sale. So a near-term hangover is seen about 24,000 to 30,000 crore of fresh equity that can come in. Sources tell CNBC that RBI and FinMin actually opposed to this based on the fact that the move is not in right spirit, and also they believe that this can set a bad precedent for others to follow. Opposition is also opposed. Party is also seen from industry stalwarts. Move is seen as unfair to others who have complied with the issue, like Union Bank of India did few years back, and therefore we had written to Kotak Mahindra Bank on Tuesday morning regarding the same.
Okay, Abhishek, thanks a lot for that. Kotak, of course, had not replied when Abhishek had written to them. He had the story on Tuesday morning. Ekta, of course, Sun Pharma reacted to numbers, but it looked like a turnaround. So obviously, the analysts would be positive, and also you're watching out for Dr. Reddy's.
Yes, absolutely. Well, for Sun Pharma, I expect some amount of incremental buying to come in. CLSA has hiked the target price to 750 versus 600 rupees earlier. They have a buy on the stock. They expect that maybe there is a chance that the adjusted EPS could double over the next 2 years. Sun Pharma management overall sounded very confident and much more confident in terms of their guidance, in terms of the specialty launches than they have in the previous quarters. So that should bode well. Separately, Dr. Reddy's is in focus, sentiment positive. They've received approval for a cancer drug Gleevec generic, should probably make around $10 to $15 million from it, but should be a positive for them.
Okay, thanks for that. Well, big fall seen in crude and in metals. In fact, Brent is now at a 4-month low. Manisha is here to tell us more. Manisha, hi, morning.
Morning, and thank you for that. Well, yes, the Brent prices are trading at a 4-month lows. You have the US crude trading at a 2-month lows as well. It has been a 3% of a decline in the overnight markets, and that is because you have seen the strength in US dollar continue. The US weekly inventories have surged by 6.8 million barrels. Markets were not ready for that kind of a number. And then apart from that, there are reports suggesting that the OECD global growth has peaked in the month of January, and since then we only have seen a decline come in, and that would really lead to some demand uncertainty. So decline in crude oil prices, but clearly a good time for OMCs, aviation and paint stocks, etc. The other space, of course, is the metals, where you have seen the copper prices now enter into a bear territory, 22% down from 52-week highs. That one is trading at a 13-month lows. Almost every metal in the day today has started on a weaker note.
Okay, Manisha, thanks a lot for that. Yes, we'll watch out for Vedanta in particular. Copper at a copper in a bear market, crude is down, so obviously there's a cane business. So all of this will have an impact, and Vedanta stock, of course, is in a bear market of its own, down about almost 30% from peak. Rima, Reddington is in focus because of Turkish issues?
Yes, Anuj. And they held a conference call with investors on Tuesday post-market hours to discuss the impact of the lira depreciation on their business. So they indicated that in FY18, the Turkish business, which is Arena, contributed about 8% to their revenues and less than 1% to the overall profitability. Also, there is a natural hedge. So 82% of the receivables are actually dollar denominated. Now, going ahead, the company is proactively cancelling some of the orders or putting it on hold. They are focusing more on collections rather than making new, coming with rather than sales. They're looking to cut costs to the tune of about 10 to 12%. So the company is proactively taking steps to curtail the impact, the negative impact, because on the Turkish operations. Now, the stock has seen a fall of nearly 25% in the last 3 weeks, and because the Turkish operations may not be as much, less than 1% to the overall profitability, there is a possibility that the stock may bounce back after the 6% fall that it had on Tuesday.
Okay, we'll keep an eye out on that, perhaps a bounce back there. But some good numbers coming in post-market hours. It's, of course, the end of the earnings season. Names like Dilip Bilkon, etc. didn't do too badly. Sonal is here to give us those names. Sonal.
Good morning, Sonia. I'll start with Dilip Bilcon. As you mentioned, the profits, they'd almost doubled on a YOY basis at 255 crores. There was some compression in the margins that came in at 17.8% and were down around 20 basis points. Brigade Enterprises, good set of operational numbers, though the commercial operations saw some weakness. New sales volume went up by 37% and new sales value, that went up by 19% on a YOY basis. India Bulls Real Estate, they have readjusted their numbers basis Ind AS 115. So the profits were flat at around 117 crores. CLSA says that India Bulls Real Estate's net worth has seen a hit of around 30% because of this new accounting standard. However, they are changing the new target price at 234 rupees. Hathway Cable, on the other hand, has reported a loss of around 2.5 crores versus profit last year. However, average revenue per user has increased. Back to you.
Okay, thanks a lot for that, Sonal. Of course, we want to see how they build on how much credence market gives to those numbers. That's something we'll watch out for. But Ekta, some more news on Fortis?
Yes, absolutely positive news which came in. The shareholders almost unanimously have given their go-ahead for the IHH deal. So that should work in favor of the stock. But the numbers were subdued with a loss of around 53 odd crores for the quarter. But company said that the occupancies are improving in Q2 versus Q1. So that should probably help in terms of guidance.
Okay, we'll keep an eye out on Fortis as well. But do remember that the big story of the day remains the rupee and the possibility of further weakness on account of that. Expect some weakness in banking stocks as well, while the entire IT pack could remain cheerful. Remember, the last few days have been good for IT stocks because of the fall that we've seen in the rupee. But here's a quick recap of our top stocks to watch. Stocks with positive news flow today, as I mentioned, the IT names TCS, Infosys, HCL Tech. You have Sun Pharma, Dr. Reddy's, IOC, BPCL, HPCL because of the fall in Crude, Dilip Bilcon, Brigade Enterprises and Reddington. While stocks with negative news flow, SBI, Kotak Mahindra Bank, Nifty Bank, Vedanta, Tata Steel, huge fall in metals globally, Hindustan Copper, Shree Infra, India Bulls Real Estate and Hathway Cable.